So the data is definitely far stronger on the buying side, and the intuition is correct. There's only one real reason somebody buys stock in their own company in a significant way, and that's because they think the stock price is going to do well, and not just that they think it's going to do well, but that they think it's going to do better than the S&P 500 relative to the risk they're taking. Otherwise, they just go out and buy the S&P. So we've seen historically, given that there's over 900 basis points of alpha to that strategy, that does quite well. And really, there can't think of another good reason why somebody would take money out of their own pocket to buy more stock in their own firm unless they were pretty confident it was going to do well. Now, on the other side of the coin, there's many reasons why people sell, but the selling, you find, even though it doesn't necessarily mean the stock price is going to go down, it generally does mean that there's something that isn't incredible going on at that firm. It's relatively rare that you see a biotech firm where there's massive insider selling and then some huge drug comes out that cures cancer. It's relatively rare that you see enormous insider selling and then they have a blowout quarter. So while it's not necessarily an indication that the stock price is going to do poorly on an absolute basis, it is actually a relatively good indication that a stock will underperform the market when you see heavy insider selling. So what we're looking for isn't just insider selling, because you can find good quality firms like a Google or an Apple where they've been doing very well, they've been consistently growing earnings, everything's going right at the firm. However, the insiders are selling, but that only makes sense because Larry Page or Sergey Brin, they have teens of billions of dollars worth in stock, and nobody wants to have teens of billions of dollars of their net worth all tied up in one particular stock if they can diversify that somewhat. So what we're looking for isn't really just firms where there's buying. What we're looking for really is firms where there's very unusual buying or very unusual selling. So what we really want is a firm where there is no selling, and then there's a huge wave of selling all of a sudden in very high volume. Or a stock price that's getting hit very hard with very, very bad news, along with very heavy insider selling. Or a firm where there are several executives buying for a long time, and then all of a sudden they all start selling and nobody's buying anymore. So that's where we really find that the strength of the data is. Not so much just that there's insider selling, but that there's very unusual, very high volumes of insider selling, or very high, very unusual volumes of insider buying. So there's a whole spectrum of insider buying and insider selling, and that's why we rank companies on a 10 to 0 scale, and we're essentially going out there and buying the companies that rank a 10 on the scale in terms of insider buying, and then we're shorting the companies that come up as a 0 or a 1 on that scale with the most insider selling. The companies that come up as a 3 or a 6 or a 7, frequently there's some insider buying, or there's selling, or there's both going on at the same time, and the signals are not particularly meaningful then. It's really those companies where there's exceptional activity.